Hi everyone. Today we will discuss why have central banks increased the purchase of gold phenomenally. Let's discuss. The central banks act as guardians of financial and economic stability. Every major central bank like Federal Reserve System of America, also known as Fed, Bank of England of UK, European Central Bank, which is a union of European countries, Bank of Japan, Reserve Bank of India, etc., keeps a portion of its reserve in gold. At the time of uncertainty and economic turmoil, it acts as a hedging instrument, and in particular, it is regarded as an effective inflation hedge. What is hedging? Well, it is a strategy that tries to limit risk in financial assets. Hedging is done to reduce the risk of an adverse event. In the year 2022, central banks globally have accumulated gold reserves at a pace never seen since 1967, which was the period when Bretton Woods system was followed. That is when the American dollar was backed by gold. As per World Gold Council report, in the first 9 months of 2022, net purchase of central banks across the globe amounted to 673 metric ton. Just during the third quarter of 2022, as per World Gold Council, central banks bought a record 399 tons of gold. Whereas in 2020, central banks bought 273 metric ton of gold, and in 2021, central banks bought 463 metric ton. Turkey was the largest gold buyer in 2022 of 95 tons of gold year to date, taking its gold reserve to 489 tons. The Reserve Bank of India purchased 17 tons of gold last quarter, bringing total gold reserves to 785 tons. Qatar, which recently hosted the FIFA World Cup, its central bank made history by buying 15 metric ton of gold in a single month of quarter 3 of 2022, breaking its old record of buying similar to this way back in 1967. Among the top buyers, we are not hearing the name of Russia and China as it's their state secret to not disclose the details of their gold buying. Although it's being said that both Russia and China have been buying gold from the outside world as well as mining in their own country and retaining it. Now the question arises, do countries have to disclose their gold buying, or is it mandatory for the countries to disclose gold buying? Well, the answer is no. There is no regulatory body of gold which can make mandatory disclosure. The International Monetary Fund, that is IMF, tends to be the main regulatory authority in terms of asking for this information from its members, but it's a request and not a requirement. From the IMF filings, most of the information of gold buying comes. The World Gold Council takes information from IMF. Let's discuss various reasons as to why central banks are hoarding gold. Central banks want to diversify from the dollar, which has been strengthening against every other currency. For example, in India, with dollar strengthening and rupee depreciating, it adversely impacts forex reserves. With India, any weakness in the rupee will have an impact on the current account balance as it's a heavily commodity importing nation and imports majority of its oil. If $1 is equal to rupees 74 and when dollar appreciates to $1 is equal to rupees 82, then for importing oil, India will have to pay more, due to which its forex reserves will fall. To counter this, the Reserve Bank of India can shift its focus towards increasing gold reserves. Some experts believe that any decrease in the value of fiat currencies could be countered by raising gold reserves. What is a fiat currency? Fiat currency is not backed by a commodity such as gold or silver. It lacks intrinsic value and is established as a legal tender by government regulation. At present, most nations use fiat currencies like US dollar, British pound, Indian rupee, euro, etc. Every major central bank keeps a portion of its reserve in gold. During the balance of payment crisis in 1990-91, Indian government pledged 67 metric ton of gold to the Union Bank of Switzerland and Bank of England. During inflationary period like currently, where inflation of America is 7.1%, Germany is 8.6%, UK 10.7%, Euro area 10.1%. The rising global inflation means decline in value of all major currencies against real assets like gold. Gold is a universal commodity and accepted as a preferred store of value in case of high inflation. In a policy response to rising inflation, the central banks increase interest rates. High interest rates are negative for gold as gold is an interest-free investment. Money will flow into higher yields investments such as bonds and money market funds. But there are many instances of gold and interest rates rising together. The relationship between gold prices and interest rates is uncertain because gold is traded on a global market level, which is subject to such forces which are beyond the reach of central banks. Central banks thought there was a stable rule-based global financial system, and believing this, between early 1970s and 2008, central banks sold gold, but the global financial crisis disturbed their confidence. Besides this, the rise of China globally and the present Russia-Ukraine war has created more uncertainty. During times of uncertainty and economic turmoil, gold is considered as a safeguard. Gold as a metal. It makes sense to bulletproof yourself with metal in a world where you can trust no one, where there are geopolitical conflicts and socio-economic concerns. India is buying gold to protect themselves against crisis. It looks like authoritarian governments and their central banks believe on gold to counter the hegemony of US and Western Europe. Hence, countries such as China, Russia, and Turkey are buying and mining gold. What is hegemony? It is the political, military, and economic dominance of one state over others and therefore able to control others. Due to Russia-Ukraine war, Russia's financial sector has been slammed by sanctions. Russia's access to international financing is limited. International payment transactions are difficult as SWIFT and a large part of countries' currency reserves are frozen. SWIFT, which is Society for Worldwide Interbank Financial Telecommunication, and is an international payment system used by thousands of financial institutions. US government debt is considered to be risk-free investment, but in February 2022, the coordinated sanctions on Russia's central bank has vaporized its most of the around $500 billion in reserves from its balance sheet. When the Ukraine war started and sanctions were imposed on Russia, many Russian banks were excluded from SWIFT. The move is aimed to hit the Russians' banking network and its access to fund via SWIFT, which is pivotal for the smooth transaction of money worldwide. But SWIFT is not your traditional high street bank. It is a sort of instant messaging system that informs users when payments have been sent and arrived. SWIFT was created by American and European banks. Countries like Russia and China are looking for alternative to SWIFT. Russian banks have started money transfers to China in yuan without using the international messaging system SWIFT. China and Russia may be trying a new gold-backed currency which is aimed to dethrone the dollar as primary reserve currency of the world. Hence, in recent years, both these countries have been buying huge quantities of gold. Chinese have been working about reforming the global financial system and weakening the dollar's dominance. Countries who have declared their gold purchases include Turkey, Qatar, Egypt, India, etc. The declared purchases include only 120 of the 400 tons that central banks bought in the September quarter of 2022. What about the remaining 280 tons of gold and how to look at it? Well, one way is to look at it is with countries having large current account surpluses. As these surpluses are used by the government to buy their foreign exchange reserves, which include gold. US Europe have mostly stayed away from gold markets in last 13 to 14 years. The big players left are China and Russia, and they are having growing geopolitical tension and distrust with major economic powers including America. The US dollar's dominance as a medium of exchange in the global financial world remains. As per Bank for International Settlements, more than 80% of currency transactions involved dollar in 2022. But the share of US dollar in central bank reserves have been falling rapidly from 65% at the end of 2016 to 59% earlier in 2022. Russia and China have been buying gold rapidly in last 14 years as shown in the chart. During period of economic turmoil, gold prices rise as it was seen in 2020 when COVID caused uncertain economic conditions that led to an all-time high price of gold at $2,067 per ounce. Whereas in 2021, the price of gold was falling and Reserve Bank of India purchased huge quantity of gold. Again in 2022, the Ukraine war pushed price on the upward trajectory to around $2,000 per ounce in March 2022. Another aggressive buying of gold by the central banks by various countries points to the impending global recession, as IMF chief Kristalina said that a third of the global economy will be in recession in 2023. Gold is a healthy, apolitical alternative and cannot be weaponized by future governments, as we may be seeing today with the US dollar. We will continue to make video on useful topics. Do like, share and subscribe to our channel. Thanks for watching.